Tariffs are essentially taxes on imported goods. They make foreign products more expensive for consumers. President Trump imposed tariffs primarily targeting China. His stated goal was to protect American jobs and industries. He argued that unfair trade practices were hurting American businesses. Trump believed that tariffs would encourage consumers to buy American-made products. This, in turn, would boost domestic manufacturing. He also aimed to reduce the trade deficit with China, a long-standing concern. However, economists and businesses expressed concerns about potential negative consequences. They warned of higher prices for consumers and retaliatory tariffs from other countries. These concerns fueled uncertainty in global markets. One of the most immediate and noticeable effects of the tariffs was a rise in prices for consumers. Goods imported from China, ranging from electronics to clothing, became more expensive. This increase squeezed household budgets, particularly for everyday essentials. Businesses that relied on imported materials also felt the pinch. Higher input costs squeezed profit margins and forced some companies to raise prices. This ripple effect further fueled inflationary pressures. The stock market, a barometer of investor confidence, reacted with volatility. Uncertainty surrounding the trade war and its potential impact on global growth sparked market swings. Investors grew wary, leading to periods of decline in stock prices. While the tariffs aimed to revive American manufacturing and bring back jobs, the long-term impact remains uncertain. Some argue that tariffs could incentivize companies to relocate manufacturing back to the United States, boosting employment. However, others contend that the gains in manufacturing jobs might be offset by losses in other sectors. For instance, higher prices could dampen consumer spending, potentially leading to job losses in retail and services. Moreover, the tariffs have injected a level of uncertainty into the global trade landscape. This unpredictability makes it challenging for businesses to plan long-term investments, potentially hindering economic growth. The United States tariffs on Chinese goods have had a significant impact on Chinese businesses and workers. Chinese exporters faced reduced demand from the US market, leading to factory closures and job losses. However, this situation has also created opportunities for other countries. Nations like Vietnam and Bangladesh, with lower labor costs, have seen an increase in manufacturing activity as companies seek alternative production hubs. The concept of reciprocal tariffs, essentially a tit-for-tat response, has also come into play. China retaliated by imposing tariffs on US goods, impacting American farmers and businesses that rely on the Chinese market. In conclusion, the full impact of the Trump tariffs is still unfolding. While there is potential for some positive outcomes, such as increased domestic manufacturing, the risks of higher prices, market volatility, and global trade disruptions remain significant concerns. The long-term consequences will depend on various factors, including the duration of the trade war, the response of other countries, and the adaptability of businesses and consumers to the changing global trade landscape.